Good morning, good afternoon. I'm James Elliott, and you're listening to Chemical Conversations by Argus Media. Today, I'm joined by my colleagues, Argus Olefins experts Sarah Ray and Craig Barry. We are going to be discussing the latest developments in the olefins market. Sarah, Craig, hello, welcome to the podcast. Glad that you could join us. First question, and I'll direct it to you first, Sarah. Where do we see demand going into the end of this year for the olefins?
That's a really interesting question, isn't it? And something that I think all of the industry is poised, wondering what's going to happen next. Certainly, we've seen in 2023 a real drop-off in demand, particularly in the European market. But I think on a global basis, we've really seen poor demand through the back end of 22 and into the beginning of 23. There are some very, very slight signs of a small improvement in demand coming into the second half of the year. I think from a stock perspective, people have run down their stocks, particularly on the ethylene and ethylene derivative chain, to the extent where we're having to come back to the market. Propylene is slightly different, and I think propylene is still suffering from a couple of things. One would be the post-COVID issue. Propylene's got a higher exposure to durable goods. It's got a higher exposure to those things that people don't have to buy and bought a lot of during sitting at home on the work from home policy. But also items which, from the cost of living crisis, people don't feel they can afford to buy currently and are not confident of their financial positions going forward. And even though I think in most of the regions the employment levels have held up pretty well, in China we're seeing some indications of unemployment, particularly in the youth sector, and a much more nervous market out there. So I think going into the second half of the year for propylene, we're concerned that pickup in demand is not really coming through, and even into next year it could still be poor. So a slightly improving picture for ethylene, and I think still quite a difficult picture for propylene from my perspective. Craig, what are your thoughts from a US perspective?
Hi, Sarah. I tend to agree with most everything you said. I think the U.S. Overall, if you look, the economy, excuse me, the economy has been doing a little bit better in the U.S. In addition to that, the U.S. is, they've enjoyed a fairly competitive cost position relative to, Europe and Asia. So they've been running harder, especially on the ethylene chain. We've seen higher operating rates, but a lot of that is translated into inventory building, especially in the second quarter. So the market is really cautious heading into the second half of the year because I think a lot of that inventory build was anticipation that we would see a demand recovery across the globe that hasn't materialized yet. So my expectations are that we're going to see the market manage that by slowing down coming into the second half of the year. So I expect the second half of the year to be flat to the first half of the year. So we really won't see much of a pickup relative to 2022. I think the big questions people are starting to ask right now is, okay, are we going to see this in 2024? But when, right? Is it going to be early in 2024? Is it going to get pushed back into the second half of 2024? I think more interesting now is that we're seeing, a lot of economists sort of revise their GDP outlooks. We're actually seeing 2023 higher than they were forecasting at the beginning of this year. So they've upped their GDP outlook, and this is even on a global basis, higher in 2023. But I think the thing that's caught a lot of market participants by surprise is that they're now revising down 2024. So I think that's causing some worry, some concern that we may see some improvement in 2024, but it's probably not going to be to the level that we were thinking earlier this year. So 2024 could be slightly better, or it could be even flat to 2023.
But the benefit for ethylene, isn't it, is that actually next we've had a lot of capacity additions over the last number of years, but for next year there's relatively low level of new capacity coming on. So at least from that perspective for ethylene, it feels like the market should start to rebalance through next year. you think?
Yeah, and we're seeing signs of that. If you look at, especially here in the U.S., all the new plants that were scheduled or projected to come up, the last of those are working through, final startup issues, and the market is seem to be absorbing or adjusting to those. But on the other hand, propylene, we've had, a new PDH startup here in the last month or two, and maybe I'll say a PDH and a half because we had a small startup as well. And even with some operational issues that we've been experiencing with PDHs over the last 3 or 4 weeks, we really haven't seen any sort of price response. So I think that reflects what you're saying, Sarah, which is that propylene is really in a different situation. We're just not seeing the demand growth because a lot of that goes into the durable goods market, and I think people are still working off of not just inventories, but just people bought a lot of that stuff during COVID, and it's just not the demand in the market for as many durable goods as there are for consumer goods that are more reflective of the ethylene value chain.
Sarah, earlier in your answer, you mentioned China. What are your thoughts on the demand situation in China through to the end of the year? Will the stimulus measures which are coming help boost demand? And what would be the implications for the global markets if we do see a pickup in Chinese offtake?
Well, China's key to the whole petrochemicals market. It's something like 30% of total consumption and total production, if not more, on some of the products. So what happens in China, we feel everywhere. I think it's difficult to see a real bounce in demand. I know the Chinese government is still suggesting a GDP growth this year of, I think, over 5%, 5.6 is a number in my head. But I don't think we really see that, and it feels pretty flat in terms of demand. I mean, as I said, there's higher youth unemployment. We're seeing people acting in a cautious way, so rather save money. I think the personal savings levels in China have gone up, and as yet, China hasn't done as much as it probably needs to address the reliance on the real estate sector. So people seeing the value of their assets going down or certainly stagnating rather than escalating as they have done for the last X number of years. So very much a situation which I think we see China sort of moving sideways and trying to stop anything sort of in fact a shrinking situation. The other thing about China, of course, is their population profile is changing. So you've got a population which actually now is aging and has actually got smaller in the last year compared to the year before, which is a phenomena which, older people buy less things. A lot of the products that we're involved with are sort of linked to population growth and to a sort of growing middle class, and a lot of that happens in the younger sector when you're first getting together and setting up home and having kids. So yeah, I think it's quite a sort of I'd say a concerning picture out in China. Yeah, Craig, how do you see it?
Yeah, and what I would add too, and I'll take somewhat of a shorter term view. If you look at the petrochemical industry, usually the higher demand, seasonal demand quarters are usually second and third quarter, and those are already kind of baked in, if I could use that terminology. So I wouldn't expect a significant pickup in demand in China because if you look at, I'll just say like North America, the U.S., our big spending and demand season is usually as we get into the holiday season. So China would have had to buy raw materials, produce those products, and starting to get those on, on container ships headed to the U.S. And so, here we are, near September 1st, and we haven't seen really a meaningful pickup in China. So I don't expect we'll see that in the fourth quarter because those two strong quarters of demand that are typically seasonal high demand seasons, which is second and third quarter, we just haven't seen that yet. So I think anyone looking for China to see a meaningful pickup in the remaining parts of 2023 are probably going to be disappointed. I think China is going to try to work through some things, some reforms, and put things in place. But I think that's more for the long term and more heading into next year in 2025.
I agree with that. Yeah.
That's China. What are the other risk factors that could change the picture?
For me, I think cost is a big one. I think we're starting to see, if you go back, let's start with OPEC. I think they've really have hung in together with their um, cuts. Saudi Arabia was originally going to maybe revisit their cuts in September. They've extended those going into October. So you're seeing a lot of forecasters moving their crude forecast higher. I think we saw a pretty significant jump up in crude here in the near term. I think it was from July to August we saw crude go up $10. We could see another leg up going into next year. Another, continuing on that theme of cost, the Australia LNG industry is looking at a potential strike. Sometime I think it's September 7th is their actual deadline. That would obviously raise the cost for natural gas in consumers and power generation, and also for industrial users of gas. So that would be a negative headwind for demand, and that would be more than likely a short term headwind on cost. But we're headed into the heating seasons going into fourth quarter, so you really don't want to see supply for LNG possibly being curtailed going into that season. So that's a risk we could see. The other one, which I think is not maybe as material as what we saw coming out of COVID, is we're still hearing a lot of things about the Panama Canal, right? With the drought conditions and just ships being able to move through there. I think that one's probably not going to be as big as it was in the past, but it's just something else to kind of keep your eye on. It's going to probably have some impact, but probably more minor than what we saw in the past.
Craig, I think you're right to highlight the issues around potential headwinds with higher costs. I mean, as you say, we're certainly seeing higher forecasts on the crude front. Although it's artificially controlled because it's controlled by supply. I mean, I think the Argus view is actually there's enough oil out there if the guys extract it, but if they're not going to extract it, then yeah, that's definitely one. The LNG really highlights, I think, Europe's vulnerability now to these longer supply chains for its energy. I mean, having shifted away from Russian supply, Europe's now very dependent on these international supply routes, be it from Australia or North Africa or the US. And yeah, the US can't really step up to completely close any gaps that Australia might open up through a strike. So yeah, coming into the heating season, that's a concern. I think sort of longer term as well. So I think longer term as well, so you from a European perspective, particularly if the downturn lasts for an extended period, will all of the producers be able to weather the storm? And I think that's a concern probably in the longer term.
Challenging demand situation, higher costs. What is the impact on the drive for sustainability from this? Sarah?
So yeah, I mean, Europe obviously has been sort of leading the charge in terms of sustainability. Although, having said that, when you look around the world, there's lots and lots of projects because the brand owners want to be able to offer these products in all of the regions. So you're still seeing plenty of projects out there. We're seeing lots of producers integrating downstream into recycling companies to secure that route to market. And we're seeing lots and lots of projects to create sort of a greener footprint in terms of feedstocks or routes to produce ethylene and propylene. In Europe, we've got a project for new ethylene capacity that's from ethanol. It's relatively small at the moment, but it's maybe a sign of what's to come. But the issue for all of these projects is really the amount of money that the producers have to invest to bring them to market. And at the end of the day, is the consumer going to be willing to pay? So I think there's something like 17 million tons of pledges out there in terms of marketable product that producers have said we're going to produce this and it's going to be available. The issue is marketable doesn't necessarily mean that they'll make it, because it has to be bought by somebody, and consumers at the end of the day are the guys who are going to have to step up and pay some additional cost. I think from a European perspective, there's a lot of pressure for the governments to step up and create some sort of carbon border. But as yet, that hasn't happened for the pet chems. It's happened for, and is on the list for things like steel and cement and other energy intensive products. But pet chems didn't make it onto that final list in the last round of legislation from the EU. How about in the US, Craig?
I would say in the U.S. there's a lot of a lot of projects being discussed and developed. I think there's some headwinds, but also some tailwinds. So it's a little bit of a mixed story, right? I think for project developers who are already, further along in their projects, maybe looking to get financing, obviously these higher interest rates that we're seeing today is a bigger challenge for some of those projects. I think as they were conceived and conceptualized, they were probably anticipating a lower interest rate environment. So the project financing costs are drag, and we're starting to see some project developers and owners discuss that as they report some of their earnings, that some of the ESG projects are being a little bit disappointing. They're not meeting some of their financial targets. I don't think that is changing the commitment or direction of industry and policymakers to go forward with this. But I think short term, people are going to have to adjust their expectations, maybe delay some of the projects. But I mentioned a tailwind. I think the Inflation Reduction Act that was passed last year by the Biden administration, you see that being quoted a lot as being helpful for a lot of projects. The government's going to step in and provide a lot of incentives, tax breaks, and other things to help drive some of the projects and initiatives that are out there. I think more specifically, as you look at our industry, and I see it kind of as a tale of two worlds. Smaller, maybe not as well financed, maybe not as many capabilities internally. Project developers may be at risk of either falling off or maybe pushing out their projects. If you turn to big players like ExxonMobil and Dow Chemical, they've all announced either it's hydrogen, or in the case of Dow recently, they announced an ethanol project as well. I think those are going to stay closer to schedule. Dow also mentioned, some people may debate how green this is or sustainable, but it is sustainable, that they're going to build a small modular nuclear reactor at one of their sites here in Texas, and they're going to start construction in 2025. So, that's a big step, especially for the U.S., for someone to build, and especially in our industry to look to build a nuclear reactor to provide all the heat and electricity for a petrochemical complex. So that's a big marker for someone to do that. And I think staying with Dow as well, when you hear them talk about their net zero carbon project up in Canada, all indications are that project's still a go and still, making progress. And I think Dow will make a, FID decision on that at the end of this year or early next year. So it's kind of, some things are going forward, some things are being, revisited, but I think overall, given the environment, not any real surprise.
No, and I think you're right. You look at projects over in Europe, the INEOS Project 1 is moving forward, albeit with some headwinds against it. The Wilton SABIC project, which is going to become a completely ethane-based cracker, but with hydrogen as feed for energy, is an interesting one as well. That would be one of the greenest crackers globally. So, yeah, a huge amount of investment across the piece. So I think, as you say, the direction of travel is clear. Yeah.
Fascinating stuff. We're in for an interesting end of the year. Sarah, Craig, thanks for your insights. Thank you for listening to this edition of the Argus Chemicals Conversation podcast. To find out more information about the Argus Olefins Outlook service, visit www.argusmedia.com/chemical outlooks. Thank you and goodbye.